Hey everyone, it is Evan here from the Trade Risk on Friday, September 13th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and finish off looking at some sector analysis. We're going to jump right into things today with our market technicals dashboard. We can see markets closed pretty quiet here on Friday. All of the major indices closing just about flat on the session, slightly positive to slightly negative across the board. However, the 5-day change numbers are quite strong here. And take a look at the Russell 2000. We talked about this outperformance that really started to take shape earlier this week in our midweek video, and take a look at just how much it dominated this week, up almost 5% over the past 5 trading sessions versus the rest of the market or major indices, which were about 1% plus or minus over the past 5 trading sessions. So some nice catch up there for the Russell 2000. Been waiting a long time for that. If we look at how the major indices are faring against all of their key simple moving averages, we are above all of them. We're above last week's highs. Life looks good here for the bulls this week. If we scroll down and take a look at sector performance, we have transports, financials, and energy at the top of the list, which is a different mix than what we've seen recently. And when we look at the underperformers, we have staples, we have technology, and we have healthcare, which is a slightly different look as well. When we take a look at some of the major markets here, we got natural gas, we have China, and emerging markets all rounding out the top 3. On the downside, we have volatility, we have TLT, and we have silver. So let's jump into the charts now. Let's put some levels to these numbers. Take a look at what went on here. This is the S&P 500. This is the cash market, and we're looking at a weekly time frame. So each bar represents 1 week worth of trading. Now, first and most kind of notably here is that the S&P 500 is so close to its prior all-time high. In fact, we almost got there intraday on Thursday, but we started to pull back. We're about 0.5% from breaching two new all-time highs, which we last saw back in July of this year. Markets closed, the S&P 500 closed at 3,007 here for the week. If we can start to get above 3,028, that will get us back to those all-time highs. So when we look at kind of the structure here and what went on, we basically had a follow-through week to the upside. We saw trends momentum continue from last week's breakout above the August range. So remember, August was choppy, volatile, back and forth, two-way trading, lots of indecision, lots of headlines throughout the course of August. It really just whipped around in this 4-week range. We broke out last week to the upside, clearing above that resistance. We added to those gains this week, and you can see we pulled off just a little bit off of those highs, but above us, this 3028 area, that's what we should be paying attention to. Those are the prior all-time highs in the S&P 500, the last line of defense or resistance as it is of overhead supply. So if bulls can start getting through there, we're suddenly back at all-time highs and can start to, potentially trend and add to them throughout the coming months or weeks or days, so long as that can continue. Now, on the downside, I would say the same level that we kind of looked at last week in prior videos here, 2950. This was essentially the upper end of the resistance or the upper end of the range from August. That's going to be key going forward. So long as we are holding above 2950, you got to give the benefit of the doubt here to the bulls to keep this trend and momentum and direction in their favor. If we start to lose, this week's lows, which comes in around 2957 down to 2950, if we start breaking back below there, that would give me some concern, some pause just in the overall structure here for the market. But until and if that happens, the bulls definitely seem to be sort of carrying it to the upside at this time. Now, if we take a look at VIX here, the one thing we did note in our last video is that the VIX structure was still holding up a little bit. Let's take a look at how it finished out the week. So it did continue to bleed lower for the week. It did close below 14, but notice we are still, above the levels, the 12 handle that we saw back in July. And, if we go back even further, of course, when the market tends to get in more of that sweet spot trending zone, we can really see these readings down here around 12 or so really kind of settle in there as the market just kind of grinds to new highs. We're not in that behavior yet. We're just we're slightly above the July lows here. So we're going to want to be paying attention to this too, just to kind of see if we can finally start to come to some parity here, if we see more unwind in the VIX, or, maybe this higher low causes some other, abrupt pullback in the market as well. We'll see, but something to keep an eye on there in terms of volatility. So that pretty much rounds out the S&P 500. The big notable move here was the Russell 2000. I think it's something that we all should be paying attention to, because the volume alone just for this week here, you can see running at nearly almost 200%, or almost double the average 20-day weekly volume here for the Russell 2000 is what we did this week. And we did it on almost a 5% move, which is really the largest move we've seen in multiple years. We had a 4.73% week back here in July as we started to ignite and V-shape. But really, this almost 5% rally, this isn't something that we've seen, especially on this type of volume, in quite some time. Now, when we look here structurally, there is still work to do. In other words, we just did come roaring to the top end of this range. 160 has been a firm lid for the small cap stocks, the small cap index Russell 2000 here for the past year. We haven't been able to really break above this 160. So given the urgency behind this week's move and the ignition here to the upper end and to sort of retest this 160 level, it's going to be very interesting to see if we can get follow through, if we can actually get a convincing break and breakout of this level that has been in place for the past year, 160 or so, this week's highs. Let's see if we can start to clear above there, if we can add to these gains next week. Again, a 5% move in 1 week worth of trading, that's a big move. So, if we have to pull back, settle in here in the short term, these are all, of course, kind of par for the course standard things. But, bigger picture, given the volume, given the outperformance here, I do think the Russell 2000 is notable after this week's trading. Now, if we look at finally the Nasdaq 100, you can see this kind of looks a little bit similar to the S&P, maybe a little bit weaker, in fact, as it closed more looking like a doji rather than kind of at the upper end of its range. It is like the S&P 500 in the sense that it is only about a little over 1% from its all-time highs set back in July for the Nasdaq 100. If we look at the composite outright, we can see, pretty much the same thing. We're about 1.5% from its prior all-time highs. So we do have kind of that same picture as we looked at for the S&P 500. Again, a little bit weaker on a relative basis here recently. The Nasdaq's been a little bit sluggish. Again, really sort of splitting hairs, but overall, the breakout from last week's holding, the trend is up here. Momentum is still up here in the short term as well. So bulls pretty much in control here right across the board in all of the major indices. Doesn't mean we can't have pullbacks. Doesn't mean we can't respect the prior resistance here at all-time highs. Could easily pull back a couple of percent, or kind of settle in sideways through time as we've had some good moves here to the upside. But overall, the bulls have it. It's theirs to lose at this point, going forward. So that covers the major markets. Let's look at, or the major environment. Let's look at some of the other major markets. TLT saw quite the unwind this week, 6.34%. This is now one of the largest down weeks we've seen in quite some time for TLT. You have to go back, quite honestly, quite far. I don't know the last time we've seen a 6% fall here. I guess it would be back in 2016 in November. if I'm not mistaken, when we had that, what really started the sluggish sideways behavior throughout the past 2 years. I think that's about as, that's where you have to go to find this type of down move. Now, in all fairness, this had a magnificent run to the upside. This had an extremely sort of historic and statistically, significant or stretched event here to the upside over the past month of trading throughout July and August. We've simply now, in a very fast fashion, corrected that and unwound all of the froth and excitement and momentum there in very sharp order. You can see that, in fact, even with a 6% down move, we actually still have the essence of the longer term trend intact, which kicked off earlier this year. If we were to draw a trend line from more or less the slope that started in March, you could see we could come all the way back to about 133 and effectively retest right where the TLT started to get silly, right where it really started to go parabolic here back in the start of August. We could come all the way back there. That seems like a reasonable spot to sort of retest, see if buyers are still convinced and involved, and see if we will respect that trend. Otherwise, we'll see if buyers can put in some type of higher low. But given this magnitude move, I don't want to jump too quickly in front of it. I'd want to let this settle out. We did have a short position in here, which we initiated here. We covered into, I believe it was this day here. And of course, this did continue to melt down even further. So we don't have any further position in this. Talked about it in the last week's video. No further position, no further short in TLT. That trade has been covered, and we're just sort of watching this now from the sidelines to potentially, even come back down, retest at that level we just talked about. So a little bit of exit door rush there for the TLT. If we go to gold next, you can see that this one here is not quite the same exodus here. We're not seeing the total panic rush out the door, as we're seeing in TLT. Could make the case that it wasn't as historically extended to the upside as TLT either. But for now, gold, which is usually and was in fact acting as sort of a safety haven throughout the course of August. This is now unwinding a bit here as equity markets are getting a little more love, a little more rotation. We're seeing gold, TLT, those things come out, money flow out of those assets. And gold here is now coming back into some of the levels we saw back in early August. Again, when we look long-term here, this trend, or longer term, if we look at this trend here from May, it is just at that point. It is arguably testing it now, breaking it now. So we're going to want to see if the gold bulls can step in here and support this slope. Otherwise, we'll need to look for that higher low before we get too aggressive there on the long side. And for silver, this also took a leg down here this week, 3.32%. Most of the selling coming on Friday, in fact, and this one here also is kind of resetting itself from its very frothy move. This is already 11% off of its highs made just a couple of weeks ago. So once again here, let's see if we can get that higher low to settle in, see if buyers can step back in and support this as it comes back down to some of this prior structure. Last but not least, if we look at energy, you can look at USO here, mostly sideways week. It was down 2.8% on the week, but back into this sideways range here. It's pretty choppy. No real new comments here until it starts to break and hold above $12 or starts to break down below 11. Not too much else to say about it, just sort of range bound and chopping. Natural gas, on the other hand, does continue to rise here on the week, accelerating, adding to recent gains, 5% here, really repairing some of the damage, looking convincing in terms of, the intermediate term bottom being in now for natural gas even. We are back above some of this prior structure here. We're certainly extended to the upside. It is a very tough move to chase, so I would want to be letting that settle in or pull back or digest before getting back involved in it or getting involved in it, period. But for now, trend and everything is still favoring the bulls, so they are working it to the upside now, and got to respect that, at least in the short term, as extended as it is. So that is the major markets. Let's take a look at some sectors now. Let's look at what performed best, what performed worst. We'll look at the 5-day performance here, and at the top of the charts is financials here, racing to the upside. You can see They ended up holding and emerging out of this slop in here from the 26 area. That was a pretty important level for the financials to hold. They did. If we look at this on a weekly basis now, you can see we're trying to get back up to the upper end of this range. We're trying to start to emerge here from a lot of this just messy action and this sideways action that has really undergone financials for the past year and a half. And right now it looks pretty good. It's a tough chase. It's coming back into resistance. So again, there's lots of caveats there for chasing in the short term. But if we can start to clear above $29, that's going to bode really well in the future for financials here over that area. If we look next at second best performing, this is again a place that had been beaten up and kind of underloved recently, and this is Biotech, and this is small cap Biotech here for XBI. It did rally back above the June lows here, and it is again not nearly as extended or frothy as a lot of these other markets. And if this decides to come to life now, again, this would be a good rotational candidate here. It's been sliding down for weeks on weeks, and now we can see it's starting to perk itself back up. It's going to need follow through. It needs to get this MACD back in positive territory. There's still work to do here, but again, a nice rotation into a sector of the market that has been fairly underappreciated for a lot of this year. Last but not least, on the top three here is XLE. XLE really got hammered over June, July, August. It's been hammered. It actually almost retraced entirely the gains from 2019 just 3 weeks ago. So a nice rebound here is kind of that oversold snapback rally. Structurally, I still kind of dislike XLE on a general basis here. There's just other areas of the market that look more interesting to me. It does look like we can potentially, come all the way back up to this 65 area, 64.50 area, the June highs, but not sure I'd want to be overstaying the welcome there in XLE until proven otherwise, until this trend really starts to turn around on this weekly picture. On the downside, IYR, so this is real estate. This was acting pretty strong here last month, but starting to pull back a little bit. Heavy volume coming in this week. We took out last week's lows, closed near the lows. It was down 2.21% this week. So IYR a little bit heavy here, still holding up in this trend. It is very much a grinding sort of asset here, as it reluctantly has just been kind of grinding to the upside, but kind of resetting itself and pulling back to the lower end of that channel. Staples here, defensive place of the market, kind of makes sense when we have small caps up 5%. You clearly kind of see where the risk appetite is. It's not going to be for staples. It's going to be for those small cap stocks in the financials, in the energy space, and staples here just pulling off of the all-time highs, but still holding that trend to the upside. And the one sort of peculiar one or interesting one to see here, and this kind of speaks to what we talked about at the top of the video with a little bit of Nasdaq underperformance. You can see that the XLK was actually in the bottom three this week. So this is the Spider Technology ETF, and you can see this was actually down this week. Again, structurally, there's not too much cause for concern here. It's not breaking any levels. It's simply just not seeing that same rotation as some of the other financials, industrials, and biotech sectors of the market, and it's still very close to its all-time highs. So just kind of interesting there. It'll be interesting to see if technology takes a breather here in the near term or in the intermediate term as some of these other sectors that have been out of favor start to play catch up. That's something that we're going to have to keep an eye on in these recap videos. So that's it. That is what I have for this week's trading. Bulls kind of holding it in, holding it down, extending gains to the upside. We are extended in a lot of places, so expect potential pullbacks there, but otherwise I think the bulls have those trends at their back. So thanks so much, as always, for tuning in and watching. You can subscribe on our YouTube channel, follow us on the Trade Risk. Have a great weekend, and we'll see you back here next week, Tuesday, for the midweek video recap.